Shares of ITC and Varun Beverages are down about 1.5% after sources tell CNBC-TV18 that the GST Council is likely to mull a 35% special GST rate on tobacco and aerated drinks.
Torrent Power is up close to around 4% as sources tell CNBC-TV18 the company has launched a QIP worth around 3,500 crore rupees to sell 4.5% equity at an indicated price of 1,503 rupees per share.
Solar Industries up over 3% after its subsidiary receives defense product orders worth nearly 2,000 crores over a period of 4 years.
MOIL gains after announcing record-breaking manganese sales in November. The sales are up by close to 32% year-on-year at around 1.33 lakh tons. The stock is still down 40% from the recent peak.
Food delivery giant Swiggy is up around 3.5% ahead of its results today, the first since the company got listed on the exchanges.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. And as we speak, the markets have got past that crucial 24,400 odd mark. The Nifty Bank as well is powering ahead. The last couple of sessions, it had a bit of a consolidation, but now the Nifty Bank has taken off. It's leading the Nifty higher. And now we're at a very, very crucial juncture because the Nifty last week went numerous times to 24,350 to around 24,400. But as we speak, we're trading mildly about those levels. So the bulls will feel they have the momentum. They'll want to push home the advantage.
Absolutely. We'll keep an eye out on the big imponderable towards the end of the week, which is the RBI policy.
Yes.
Our hopes being, priced in before the outcome of the policy itself, or what exactly is the street factoring in this time, especially in light of the weak GDP data that came in. We'll keep an eye out on all of that. The broader market's doing a lot better with nearly 2,000 stocks advancing for 500 stocks, which are at the lower end. So this morning looks like a very good one for the bulls. In fact, all of last afternoon, we saw that recovery on the markets, and that continues into this morning itself. Let's get you an idea of a profit coming in from our colleagues at Money Control Pro. Bharat Janani joins in with a stock that he's been tracking.
Today's ideas will be Cello World Limited. The company posted weak Q2 performance with a flat top line. Subdued consumer sentiments in the domestic market as well as logistic issues in the exports impacted the performance. While the growth was muted in the Q2, the company expects a strong growth in the second half owing to the wedding and the festive season. We expect the company to deliver double-digit growth in the current fiscal despite a muted H1. The new Rajasthan facility, which manufactures glassware, is expected to contribute to the top-line growth from Q4. The company expects to revert to its long-term historical healthy growth rate of 15 to 17% from the next fiscal. The company is continuously launching new products as well as ramping new segments like the writing instruments and the glassware division. The company is also enhancing distribution reach, which would be a key growth trigger. Apart from this, the company is looking at inorganic opportunities which would provide the growth momentum. The implementation of the BIS regulations would benefit domestic branded players like Cello World. The merger of the listed subsidiary Wimplast is a positive development for Cello World. Cello World is amongst our preferred bets in the consumer space. At the current market price, the stock is trading at a PE of 42 times FY26 projections.
Welcome back. Before we, take a short break, just keep an eye on a couple of stocks. The new F&O entrants, some of them doing well in today's trading session. Jio Financial Services, for instance, has moved to the high point of trade, currently sitting with a decent gain of almost 2.5 odd percent. The other one that we're looking at is also Nykaa. Nykaa is the other entrant into the F&O space in this series itself. That stock too has moved to the higher end of today's trading range with a gain of almost 2.5% from the lows of today. Take a short break, come back, focus on the markets, and perhaps get in a corporate conversation as well. Welcome back. You're watching us here on Chartbusters. The stock on our radar right now is Signature Global. The company saw its sales rise over 184% year-on-year in the second quarter, guided for launches worth nearly 16,000 crore in this financial year itself. Ajat Kathuria, who is the CEO of the company, joins us now to give us an update on the company's growth plans. You've always, laid out strong growth plans for this year, Ajat. So just wanted to understand a couple of things. One, of the 16,000 crore launch pipeline that you have for this year, how much have you done so far? And are you on track to achieve this number? And while you're talking about that as well, if you could give us a sense on whether you're on track to achieve that 10,000 crore pre-sales and 6,000 crore collections number for this financial year as well. And if you could give us targets for the next year.
Sure, Mangalam. Thanks for inviting us to your show. So we are on track on most of these, numbers as guidance, which we had given at the start of the year. So as far as the launches are concerned, out of the 16,000 crores, we've done launches of approximately worth 9,000 crores during the first half. And during the second half, we are fairly comfortable with the balance launches for this year. As far as sales are concerned, we've achieved about 58% of the annual guidance. So we've done about 5,800 odd crores of sales for the first 6 months. And we are again, I think this quarter is also going quite reasonable. Can't spell out the numbers, but in general, I would say the demand's holding and sales continue to be going in the right direction. So we are again comfortable with the 10,000 crores of sales guidance which we've given for this year. As far as collections are concerned, we still have some more work to be done. We've done about 2,100 crores in the first 6 months, but we stay confident for the annual guidance at this stage.
All right. Hi, Rajat. Good morning and good to see you in. Rajat, do you want to up these guidance numbers, particularly in the launches and the pre-sales numbers? It appears you're pretty much on track. Or do you want to, promise and then over-deliver?
We would ideally stick to the promise on a yearly basis. So there's no preset notion on what we want to do. But it's good that we are by and large, in a comfort zone as far as these guidance numbers are concerned.
All right. You have ongoing projects of around, I think, 15.8 million square feet, which you aim to deliver by FY26. Could you give us a geographic breakup? I think most of them should be in NCR region. Will there be some part outside that as well?
No, we have almost everything which is in the NCR region. These projects are spread across various micro markets within Gurugram and, Sona, which you could also say technically today is like, market within, Gurugram. So these projects are all based in our, focused geography.
So with the visibility that you have right now, what can you guide for FY26? Because the 15.8 million square feet, I presume that a large part of that would be back-ended in FY26 itself. Or is there a possibility some of that comes in FY25 as well? Could you give us a sense of what your own targets are when it comes to launches and collections in FY26?
Okay, so I'll give you a bit of background on the portfolio side. So there's about close to 12 million square foot is something which we've, delivered till date. We are a 10-year-old entity and, we've delivered about 12 million. There's an additional 15.8 million, which is at advanced stages of development. So over the next, 4 to 6 quarters, we'll be delivering a lot of these projects as well. Besides that, there's another 35 million with a GDV potential in excess of 50,000 crores. And within this, forthcoming basket, most of this land is owned by us. To give you an idea, more than 90% of the GDV of these forthcoming projects will belong to the company. And there is very little or literally nothing in terms of land payments, which is still overdue or due from our side. So there's good amount of, land, stage raw material, which is sitting with us, which is primarily owned by the company. So, that helps us keep doing a sustained supply of products in the, micro markets we operate in. One other thing I would like to add up is that, we've also diversified ourselves a little in terms of the product offering. So, for instance, prior to this calendar year, we were doing only mid-income housing, whereas during this calendar year, we've also gone into a bit on the premium side housing, which, we saw some good response. And we've even, recently launched some plots, whether for residential or for commercial or multi-purpose usage, even they've sold well and it's almost becoming a segment within the company. So, with this kind of expanded product basket, we are fairly optimistic in terms of our current next year's performance as well.
All right. Very quickly, if you could tell us about circle rates. There's an average increase is what we understand. And both of us are Bombay boys. We're not jealous at all about the Gurgaon market. I assure you that. But has it moved up? If yes, what's the average price?
So if you will see Gurgaon, property rates or capital values over the last decade, so for almost 7 to 8 years, they were stagnated between 2013-14 till about, 2021. Post-21, we've seen about 2 years when, a correction happened, prices went up 70-80%. And that's where the gap between the real value and the circle rates really, widened, which, the government keeps correcting, in a periodic manner. And post 23, we're now seeing a phase where capital values are more range bound. They're not kind of, seeing any sharp increase. Volumes, which is good for volumes, it's easier to trade. Buyer and seller, both are able to converge on a price and close the trade. So, volumes are healthy right now due to the strong fundamentals of the local market. But
And realizations, what do we expect for you? Because, while you said the circle rates were a correction of the big prices increase that we saw post 2021, we've seen that as a change in your realizations as well. A few years ago, it was close to 4,000 odd rupees. Now it's turned to between 13 to 14,000 rupees per square feet. Do you believe that this is a range that will sustain, or maybe because of the product mix, it will go on to around 15, 16 and settle at around 17, say 2-3 years from now?
So see, our average realizations have gone up because of premiumization of product and, inclusion of better location project locations in our portfolio. We feel that, so that's the primary reason why that 4,000, 4,500 per square foot numbers almost, tripled over the last, 3 to 4 years. You shouldn't expect anything like this happening, in times to come. So we feel you'll should potentially see a more inflation-linked sort of increment in, capital values over times to come.
All right, Rajat, we are happy for you, and we'll track you on all these numbers that you've given us. Look forward to having a chat with you rather soon. And if this is the last time we're speaking in this calendar year, wish you well and look forward to 2025 as well.
Thank you very much.
Well, for the time being, we slip into a short break. We come back. We'll focus on VST Tillers. Remember, they came out with their update for the past month. We'll find out what's the way ahead for the remainder of this fiscal. Welcome back. Well, VST Tillers is the company that we're looking at. We have with us Mr. Anthony Cherukara, the CEO at VST Tillers. Hi, Anthony. Good morning and good to see you in after a while. Well, for the month of November, the volume numbers are looking pretty good. Tractors on a lower base, well, that's popped up. And even the overall numbers are up between 6 to around 7%. So that's good news. For the year, give us a guidance on the three segments that you operate on. Tillers, tractors, as well as weeders. What kind of growth are you looking at in comparison to the last fiscal?
Yeah, good morning, Nigel, and great to be talking to you again. And H2 is good for agriculture. The rains has been good. We expect the demand to grow in H2 compared to the previous year. On our power tiller business, we are looking at about 10 to 15% growth. We are looking at tractors to grow between 15 to 20%. And for the power weeder business, we are kind of doubling the business. So it is accelerating. While all the three segments grow, we are also looking at the international market. Right. And in the international market, we are looking specifically at Europe. We have some new product launches that we have done. With that, despite the war and the logistics costs going up, we expect at least a 10% growth in the international market as well.
All right, so let's bring all of this into what it does to your income statement. 10 to 15% growth in tillers in the second half, 15 to 20% in tractors, doubling power weeder, 10% growth in exports. You're talking about Europe. I remember you talking about the US at some point as well, so we'll talk about that too. First half of this year, revenues at around 500 crores. What are you targeting for the entire year? Because you still have that aspirational target of 2,000 crores for FY26. That's still on the cards, right?
That is definitely on the cards. I'm looking at 20% plus kind of growth for this financial year. And I think the way things are panning out in H2, I think it is very much doable. And the visibility for the next year is still maintained at 2,000 crores.
Okay.
Coming to talk about the US market, we have announced the launch and we have registered the companies. And we would be launching the products in the US market Q4 of next year.
And how much is the potential revenue that you see from exports as a proportion of your overall sales in the next 2 to 3 years, Europe and US?
Yeah, international business as a whole was about 3% 3 years back. Last year, we clocked about 12 to 13%. In the next 3 years, we expect the overall international business to be at about 25% of our revenue.
Okay, all right. Just to confirm, Anthony, for this fiscal, you're looking at a 20% growth, right? In comparison to last year, that is revenue growth.
Yes.
All right. And margins, for you did around 13% as of the last quarter, but it's been steadily improving, which is great. Do you get back to the high teens? Is that possible? And also, if you could give us a sense about receivables from governments, that's coming in, right? There's no problem on receivables as of now?
Yeah, there is no problem on receivables at this point. While in Q2 we saw a slight increase in receivables, which was all pending payments that is coming through in Q3. So no issues on the receivables front. And coming to the margins, see, we had given a guidance of about 11 to 13%, and we continue to stick to that. This is considering the large revenue expenditure we are doing in terms of entering new markets, both in India, which is the northern markets with the higher horsepower tractors, and the US market with compact tractors and electric machines. So yeah.
Right. So on the higher tractors itself, you had a target of 1,000 units this year itself. That's the Zetor JV that we're talking about. How much have you done so far, and what's the target here?
We don't want to give out the numbers, but I can tell you that we will be very close, or we would be hitting the target this year.
Okay. All right. Very quickly, Anthony, before we let you go, the market cap has moved up and the stock has done quite well as well of late. But it seems the street is ascribing a good amount of the value to that land that you have, the 25 acres. What's the decision? We're going to speak to you after a while. The last time around, you told me, Nigel, we'll be taking a decision on that soon. What's the decision?
Yeah, what I told you, Nigel, is at the appropriate time, we will take a decision. That is when we need the money for further growth. Right now, we have not taken a decision on that as yet, but we are looking at inorganic opportunities, and as it arises and when the need of money is required, we will be doing that.
Well, what is the rough value for this 25 acres, if you have to put a number to it?
I don't have a market value, but all of us know that real estate prices are increasing in cities like Bangalore. So it augurs well for the company.
So typically 1 acre, how much does it cost? Let's keep it simple. I'm not asking about your land in particular, but in Bangalore, give us a rough range.
I am not an expert on that, frankly.
But you'll have a better idea, Anthony.
Yeah, because you're closer to Bangalore.
We are here in Mumbai. We can tell you about the acre down the road. But, in Bangalore, we're finding it a little difficult. So you give us a broad range at least.
Right, Nigel, sincerely, I have no idea because I don't want to be terribly wrong with whatever I say.
All right, let's do that. But finally, you said that you are looking at inorganic plans as well. You give us a mild hint here. What is it that is on your mind?
Yeah, definitely we are looking at, like I said, growing geographically as well as in terms of products. So we are evaluating a couple of opportunities, but it's too early to announce anything. So once things are more concrete, we will be announcing it.
So that 2,000 crores of revenue target for the next year includes some part of inorganic growth, right?
No, we have not taken that into account as yet.
That will be over and above the 2,000 crores.
Eventually, we have to chase down the 3,000 crore vision as well. That will definitely play a role in that.
Well, it's always a pleasure talking to you, Anthony. Thanks a lot for joining in. You've given us some details. Mangalam and me are going to hold you at these numbers. And in fact, the next time around, maybe we get some kind of headway, both on the inorganic growth as well as on the utilization of that land as well. All the best, Anthony, for the remainder of this fiscal. Well, for the time being, though, we'll have to wrap up on this edition of Chartbusters. You don't go anywhere. Trading Hour comes up next.